Hello and welcome back to Swing Trading Bootcamp by Wealthy Education. In this video, taking a look at Fibonacci levels. And Fibonacci levels, without going into the mathematics, are a mathematical phenomenon that was discovered by a mathematician about 800 years ago that repeats in nature. What traders use it for is on pullbacks to decide when the market is most likely to turn around. There is great debate as to whether or not there's any validity to this, but there's so many people using it, it's more or less a self-fulfilling prophecy, so it really doesn't matter if there's anything special about it. If you want to learn more about Fibonacci, though, there is a ton of information on the net about it, mainly from a mathematical or naturalist perspective, but it is pretty interesting. In trading, what we do is we click on the Fibonacci retracement tool and we find a swing low or a swing high, depending on which direction we go. You can see that we have clearly rallied from the bottom here, and now we're starting to pull back. A lot of times, traders will use this. They'll go from swing low to swing high, and you can see that several levels are drawn. There's the 61.8%, 50%, and 38.2%, which are by far the most important. I mean, most traders don't even pay attention to either one of these outer ones. These three are probably 90% of your trades. You can see that we did rally, and then by the time we peaked, we pulled back a little bit and then pulled back to the 61.8% Fibonacci retracement level, which is considered to be what they call the golden mean. There are entire systems that use pullbacks at this level to get involved. As a general rule, I've noticed that if you do break the 61.8, you generally wipe out the entire move. That's just something I've noticed over the years. You can see that it was the entry that would have been preferable, and we skyrocketed to the upside. It works in both directions. You can use it on multiple time frames. Like anything else in technical analysis, it's going to obviously work better on higher time frames, but you certainly can use it on shorter time frames if you choose to. So, as you can see, we had made a swing low. We had pulled back there. You know, the question is it a Fibonacci retracement level? And yes, it is. It's a 61.8% where we formed this candlestick that told us to start buying. It's another thing too, though. Most people will use these Fibonacci retracement levels as a area to look for a trade, not necessarily a signal in and of itself. Some people will, but most people who use it effectively look for just a hint as to where we might find a trade signal. On this breakdown here, we bounce back. You can see we came to the 50% Fibonacci retracement level and continued lower. This is something that repeats time and time again. You need to make sure you're at the swing high and the swing low. So essentially, you don't really bring this out until you pull back a little bit on the downtrend or the uptrend, whatever has just happened. You can see this is the 38.2, and this just happens time and time again. A lot of traders will bring up a Fibonacci retracement tool, and what they'll do is they'll try to find some that overlap. So they just go from each one, and if you have multiple levels hitting in the same area, that should, in theory, attract more attention because different traders from different levels will be measuring. This is something that does tend to repeat itself, and it does tend to work out over time if you pay attention to the level and then look for the signal afterwards, which is something that we'll be talking about in the next module with doji patterns and engulfing patterns, hammers, hanging mans, inverted hammers, morning and evening stars, shooting stars. There's just a whole bunch of candlestick patterns at these levels that you use. It's just yet another tool to get an idea of where the market may go, or when it, in this case, when it goes back to the prevailing trend. We break down significantly, we start falling. You know, it gives you an idea as when you can jump in and try to join in the fray, if you will.